Can you believe that over 4 million plus Americans are in mortgage forbearance? And over 10 million Americans are still unemployed. And on top of that, over 10 million Americans are behind on their mortgage payments, which means foreclosure risk. Now, as many of you guys know, mortgage forbearance and relief programs have continuously been extended. In my terms, delayed. Now, these programs were set to expire March 31st, 2021. This included the foreclosure moratorium, the eviction moratorium, and then also other extensions that were helping homeowners and renters. Now, if this wasn't extended, it was going to have renters have the possibility of being evicted, homeowners having the possibility of being foreclosed on, and this was going to cause chaos. Now we have a major problem, and listen closely. These 4 million plus Americans that took mortgage forbearance don't really know what they signed up for. Now, as we know, every property has expenses that are unavoidable, such as property taxes, property insurance, PMI, and the mortgage itself if you have a mortgage. And these expenses, you can't avoid them, and many assume because they have mortgage forbearance, they're also not supposed to pay those. So in this video, I'm talking to you all about how the mortgage forbearance can crash the housing market and how property tax lien auctions could flood. So if you get any value, you enjoy this video, please don't forget to hit the like button because the YouTube algorithm is gonna pump it to other people just like you. Let's get right into it. Listen to this article that was stated in Forbes. Property taxes are the single largest source of tax collections in localities across the country. Most local governments do not have the reserves, enough money, to be able to go to homeowners and say, this year, you don't have to pay your property taxes. In fact, most local governments can't keep extending property taxes because eventually they're gonna go underwater. Especially in a pandemic that we are in where counties are already not making that much revenue. They're having lack of income, sales tax, and so much other revenue sources they would usually get. They aren't because of this pandemic. So they're looking for any way to make money, even if that's making you pay property taxes when you can't afford it. Also, real estate values have been going up intensely, and what this means is the higher it goes up, the higher you're gonna have to pay for the home you live in property taxes. So even though you bought your house at $200,000, but the nearby neighbor sold for $300,000 and the other neighbor sold for $320,000, guess what? You're gonna see your local city coming to your house, raising the values of it, the appraised value of the city, and you're gonna have to pay the premiums. Now, how can homeowners pay a premium in a pandemic when in the first place they're already asking for mortgage forbearance, and on top of that now they have to pay more for property taxes? It just makes no sense. But of course, these property taxes support schools, districts, and many other things in your area, such as that pothole that you keep hitting every single day when you leave your house and pop every tire on your car, yet they still haven't filled it. So sadly, your property taxes are clearly not getting paid to fix your streets. But that's aside from the point. Some localities do not negotiate property taxes. In fact, if you call them for an extension, even a day, they're gonna tell you no, and you gotta pay it that exact day that it's due. Now, you might be somebody who got mortgage forbearance and you're assuming that you don't have to pay your property taxes. You don't have to pay your property insurance because you asked the bank for mortgage forbearance, right? Wrong. If you got mortgage forbearance from your lender, you could have negotiated it for 3 months, 6 months, 9 months, 1 year. Whatever you negotiated, that's what they're giving you forbearance for. But keep in mind, it's mortgage forbearance, not property tax forbearance or property insurance forbearance. So now that this is talking about your mortgage, what about your property taxes? What about your property insurance? What happens to those? Millions of Americans who requested mortgage forbearance are assuming that those are covered by the lender. Now, there's two things that I want you to pay attention to. Number one, are you escrowing your property taxes and insurance with your lender? And number two, are you paying it on your own every single year? If you're escrowing it with the lender, then more than likely they're gonna front the money, advance the money to you, and they're gonna be making the payments on your behalf. If you're not escrowing it with the lender, then you're still due and you still have to pay it in full. Now, many don't know, but just because the lender is advancing you the property taxes and the property insurance, they're not doing it for your benefit. They're doing it because they don't want a tax lien foreclosure to happen on your property because you're not paying your property taxes. So what the lenders do is they advance the money, they cover it, but at the end, they're gonna slap you with a bill. Now, in some states, property taxes aren't cheap. Texas specifically, I'm in Dallas, Texas, and our property taxes, we honestly pay a premium for them. So if you're somebody who's living in a house that's worth $300,000, your taxes could be about $6,000, $7,000, $8,000 a year. Dividing $8,000 a year by 12 means your monthly payment is $666 that you're gonna have to save to pay the property taxes at the end of the year. And what's scary is when property taxes are due, they come in one payment and they come hefty. So if you're escrowed, your lender's advancing you the money. If you're not escrowed, you better be prepared to pay it. But here's the problem: if the lender is advancing you the money, you're gonna have to pay it to them one way or the other in the following ways. Number one, you have a choice to do a repayment plan. Number two, you can do something called a mortgage deferral, where the lender tacks on the amount at the end of the mortgage. Number three, you can do a loan modification, which is more complicated, where they adjust your monthly payments, they adjust your term, everything kind of gets restarted, and then your new monthly mortgage amount's gonna be including the money they advanced you. Or the scariest one, which is the fourth one, a lump sum, and they want it all up front. So make sure when you're working with the lender, you have everything in writing so they don't try to trick you, and don't take verbal on the phone for a cent. Now, here are some very important things that you need to know about property taxes and how dangerous they could be. Number one, if you don't pay property taxes, it'll result in late fees, interest, penalties, and so forth. Number two, if you don't pay your property taxes, it can result in a tax lien foreclosure auction. What this is the government sends your home to the auction so they can recoup the money that you didn't pay on your property taxes. And number three, tax liens supersede any other type of lien on your house, even possibly a first mortgage. So what this means is if you have a first mortgage of $300,000 but a property tax lien of $10,000, that property tax could supersede the first mortgage and you can get foreclosed on for the amount of the $10,000 in a foreclosure tax lien auction. Now, this is to an extent. There is a saying and a good rule of thumb to go by, which is first in time, first in right. What this means is that first person who files a lien usually gets priority. So if a property tax lien is recorded before a first mortgage lien, they can get priority and actually foreclose on your home. Property taxes are not to mess with, just like the IRS is not to mess with, just like a lender who's giving you a loan on the home is not to mess with. All of them can swallow your assets up. Now, many lenders pay off the property tax lien because they want to stay first priority. They want to make sure there's no other liens that supersede them. But at the end of the day, whatever they advance you, the lender, keep this in mind, even if you got mortgage forbearance and you have escrow, whatever they advance you, eventually they're gonna collect their money. There is no free lunch. Now, after this being said, you must assume nothing and check your state laws, please, because everywhere is different rules. So the concern that we're having in the housing crisis and housing market currently is that millions of Americans are taking mortgage forbearance, not realizing they still have to pay property taxes and property insurance. On top of not realizing, they are thinking that the banks and the lenders are so sweet to them. Hey, we can give you mortgage forbearance. Hey, we can give you refinances. Hey, you can even do cash outs because you got so much equity. Hey, we can advance you your property taxes and insurance. Guys, there is no such thing as free lunch. At the end of the day, everyone's gonna come back collecting their money. This is a very important subject that so many people are not really realizing, that you still gotta pay so much of what you are obligated to pay, which is the property taxes and the insurance. And when you get mortgage forbearance, it's not covering that. It's covering your mortgage specifically. The only reason why banks and lenders are helping you is because they want to stay priority and a first lien. They don't want to have a tax lien foreclosure on the property that they're having the biggest debt on. So please don't think they're just being sweet to you. There's so much behind the scenes on why they do what they do. Anyways, guys, if you are taking mortgage forbearance, I hope this video clarifies things for you. And if you're not, I still hope that you're going to be able to help others who are taking it that you might know of. And most importantly, understand that we are in a housing crisis where house prices are so expensive, where things are being done that many aren't even realizing what they're doing, and everyone's just signing off hoping that they're getting getting help. But at the end of the day, like all of you know and like I know, there's no such thing as a free lunch. And if there's going to be a housing crash, if there's going to be a housing collapse, if there's going to be a real estate market crash, whatever there might be, everyone's going to come collecting, even if you can't afford it. So stick tight, stay educated, and make sure before you agree to anything or sign anything that you know what you're getting yourself into. And most importantly, I personally know many people who are trusting the lenders and trusting the banks and not getting things written out. Make sure that you get things written out and signed and not just done verbally to protect yourself. Anyways, guys, thank you so much for watching this video. If you enjoyed it, please don't forget to hit the like button and most importantly, subscribe. I upload 3 times every single week and you don't want to miss out on it. Thank you so much for watching and I'll see you all later. I'm out.